Hey Sam, Lucky Chick, Mike, IG. How's my sound? You guys can hear me good in the chat? Great, great, excellent. So we have an interesting presentation I prepared for today. I'm excited to share with you guys my reversal strategy and more specifically, volume and price analysis. Because I really believe that volume and price analysis, in my opinion, is the most powerful indicator, and we're gonna see why together. So how was you guys trading day? Red, that's all right. As long as the execution is good, that's the most important thing, eh? Small green, Sam, good. Was definitely some good opportunities today. Unfortunately, I didn't took any reversals today, but I still ended up catching a pretty nice trade on NVDA. We're a couple minutes before 5, so might as well share with you guys the trades I took today. Just before that, let me try to put my camera. All right, there it is. So you guys see my screen, see my camera? Just if you guys can confirm me. Great. So let me share with you guys the trades I took today. Took 2 trades, one on Uber, one on NVDA. If I go back this morning, took this one here on NVDA, which was actually a 1-minute RMB. I wasn't expecting NVDA to waterfall like that, but that trade worked out pretty nicely. Good reversals from the R3 level. Anybody in the chat use the camera pivot points? I'm curious. Mike, Gorav, Ginger. Okay, a couple people. Samir, nice. So we're gonna see it more in details today. How I use the cams mixed with VPA to have a more efficient reversal strategy. Mike only S4. Okay. Not good. Good to a lot of people. And the other trade I took was actually on Uber here. So another short on Uber. So this is a new strategy I played there on Uber, more like a continuation setup. But we're not going to go in detail in the presentation today about how I play that continuation setup. But eventually in the future, I'm planning to have some videos about it. So that's going to come up with Bearable Trader or Trading Terminal. We'll see. So I'll give a couple more minutes for other people to join, and we can jump into the presentation of today. Derek, you just use standard pivot. Okay, interesting. Yeah, I believe the pivots in general, it's a powerful indicator. I used to don't use that indicator, but I've been using it for maybe about a year now, and I really like it. Gives me a better idea of if we're in a selling range or buying range, but we're gonna talk about it soon. Let's give a couple minutes here. See 39 people in the chat. That's good. That's good. I was expecting less people. Usually trading terminal webinars attract less people than BBT. And actually I like working with a smaller group. I can see the questions better and be more proactive in the chat that way. So by the way, during the presentation, if you guys have any question, just type your message in the chat and make sure to tag me so I can see the message in green. It's easier for me to track the questions. And if I end up not responding your question and missing it, don't take it personal. Sometimes I'm too concentrated on the presentation and I miss some. So feel free to ask me the same question again if I haven't responded. Alex, well, you're in the right place because we're going to talk about it today. The way I use the pivot points. I'm pretty sure most of you guys have learned the pivot point from Tor. Actually, same thing for me. I learned a lot from Tor. So I'm going to go a little bit over the same concept, but maybe I will explain it in a little bit different way. So it could be easier to understand. We'll see. Hopefully. All right. So 46 people is 5. So let's jump into it. So the title of my presentation today is Boosting Your Reversal Success with Volume and Price Analysis. So what I really like about volume and price analysis is that it's one of the only non-lagging indicator. So most indicator in trading are always lagging, like the moving averages, the VWAP, thinking about the MACD, RSI, Bollinger Band, like all those indicators, it's lagging. It's always late. It show you information late after the price action start happening. But VPA, it's something that will help you predict future price movement even before it happens. So I think that's definitely the biggest value about VPA. The only thing I will say that is more tricky about VPA is that it's more abstract. It's a little bit harder to read because there's not one situation which is the same as another. So it will be always different. You won't see the same things happening every time. So for that thing, it is a little bit harder, but with practice, with experience, you're going to see that volume and price analysis is so powerful. In my opinion, is the most powerful indicator out there. So for those who don't know what's volume and price analysis, it's basically a method used in day trading to analyze the relationship between price movement and trading volume. So if you're just starting trading, I really, really recommend you to have the volume on your chart. It's an indicator that I think is pretty much impossible to trade without seeing the volume. And I know a lot of people have the volume on the chart, but they don't really know how to read it mixed with the candlestick. So we're going to see it in detail today. So basically, the volume is the number of shares traded during a specific period of time. So you will always have a volume bar mixed with every candlestick. So you can read VPA on the 1-minute chart. You can read VPA on the 5-minute chart, on the 15-minute chart, 30-minute chart, all the way to a monthly chart. Basically, any kind of time frame, you can read VPA and the same concept apply. Yes, Alex in the chat room talking about Anna Cooling's book. You're going to see, if you read that book, Alex, already, you're going to see I'm going to go to some of those concepts in the presentation today because I learned a lot from that book, honestly. But I think it's always good to re-talk about those concepts, and especially at the end of the presentation, see some examples. So we're going to see a bunch of trades I took at the end of the presentation, and I'm going to explain in details what story the VPA was telling me. Because the way I see it, the VPA is always telling you a story. It's like reading a book. Reading a chart is like reading a book, and you're trying to predict what's going to happen in the future in the story. So that's pretty much it. So the importance of volume. Volume indicates the level of interest in a particular stock. So if you see a high volume, means that there's a strong investor interest. But if you see low volume, usually means it's a lack of interest. And the price, well, I'm guessing most of you guys know about the price, which I recommend reading with candlestick, especially for day trading. So it's the current market value of a stock or asset being traded. And the importance, price movement will provide you information about the market sentiment and trends. So those two concepts here, I present them separately, but where it gets really, really interesting is when you read both of them together. So when you read both of them together, I always see it in two different kind of category. Either you have a confirmation or a divergence. So first, confirmation. So when a high volume is mixed with a significant price movement, either up or down, it often means that there's a lot of strength in the movement. So for example, here, if we see in the two examples I put right there, the first one, if you see a widespread candle, so a big price movement and above average volume, you don't want to short that stock. That means that there's a big buying interest there. So that means there's strength. You don't want to go against it. if anything, you want to go long. If you're looking to play reversals and you see that kind of candles going up, you have no sign that the price is ready to reverse. So one thing that is really important with volume, and something that can really help you to read it, is mix it with the average volume. So you're always going to see on your chart, you're going to have a line that represent average volume. So I'm guessing most of you guys are using DAS Trader, right? Or we have people here using other platform like Ninja or DAS, TOS. Okay. So most people are using DAS, I can see. But anyway, in any platform, I'm guessing you have the option to put the average line for the average volume. So super important thing to pay attention to. So widespread mixed with above average volume, that means it's strong. On the second example here, if you see a small price movement with a candle like that, and you see a lower than average volume, again, there you have no sign that the price will necessarily reverse. That's a confirmation because it makes sense. If you have a small price movement, you should have small volume with it. And that other one we just saw, if you have a big price movement, well, it should always come with above average volume, either on the way up or the way down. So this is the first category, confirmation. Where it gets interesting is with the second category, which is divergence. So when you play reversal, the way I play reversal, what I want to see at specific levels that we're going to see later with the cams, I want to see divergence, which is anomaly. So you want to see some weird things happening with the price and the volume at those specific level, and then you'll be interested in either going short for a reversal down or going long for a reversal up. So the first anomaly here is if you see a big price movement with a widespread candle and lower than average volume, there's something wrong there, right? It doesn't make any sense. Usually if you see a candle moving a lot like that, you should see above average volume. So I don't know, if you're playing reversals and you're playing the cams, you want to short at R4, for example, you have R4 here, and you see a candle pushing up to R4 like that with lower than average volume, that's a red flag that there's manipulation there. So usually when you see that, there's something happening with the market makers, and that's giving you great insight that the price might reverse here, even before it starts doing it. So that's where it's pretty powerful. The second one here is the one I believe is the one I see the most often, to be honest. More often I see this one here than this one here. So this one here is when you see a small price movement with above average volume. So when I see that kind of things here, what it's telling me is that there's a big fight going on. There's a big battle going on between the buyers and between the sellers. And none of them are able to win. So if you're playing, let's say, a reversal short again at R4, which is, let's say, that line here, or even if that line here is a daily important resistance level, and you see that kind of candle happening, so a big fight going on in a spot where there's big chance of reversing, that's giving you great insight that there's something ready to happen. It might not happen. It's never 100% with the market, but you know that probabilities are on your side there. So any question about divergence? I think divergence is a really important concept to understand. Yeah, Sam, that's a good question. When I'm talking about the price movement, I'm only looking at the body. So I don't really care how the wicks are. So what's important for me is the body. Because for example, if we have a candle with, let's say, a body like that and massive wicks like that, with a volume looking like this, for me, the price movement is the spread here. It's not that whole spread between the low and the high of the candle. So for me, that candle is a small spread. Important question. So let's see more examples of VPA, but with a mix of candles. So in that case, with 3 candles. How many bars do you include for the average line of your volume study? That's a good question. It's an automatic with DAS. I'm not sure how much candles they take in consideration there. If I open my DAS to show you, see if I zoom on the 1 minute chart here, you can see it's the gray line I have here. So I'm not sure about the calculation exactly. Pulsing usually 9, 14, or 21. Default is 3. Well, if default is 3, I have it at default. I never played with that one. But basically, that's the gray line here. And every time you see, for example, a candle above our average here, gives you great insight. One thing I'm thinking in the moment is that VPA, it's something really, really hard to read, I will say, for the first 5 minutes of the day. So something to keep in mind, because the first minute of the day, for example, it's always, well, most often than not, the highest volume you will see in the full day. So that will play around with that average line. So like first 5 minutes, really, really hard to have some insights about VPA. I think VPA, you will have more insight after 9:35 Eastern time. All right, let's go back here. So those 3 candles bar, really important sign, especially the way I play my 5 minute ORNB. So I don't know if some of you guys saw my previous webinar I did on the 5 minute ORNB, where I talked about that concept here. Excuse me. So let's start with the confirmation here. So if you see 3 candles like that going up, so the price looking strong, and you also see a volume increasing, what does that mean? It means there's a lot of strength. It's a bullish uptrend. So if you have the level where you're interested in reversing and going short, let's say here, and you see the price going up to that specific level with a volume that is increasing, with candlestick also going up, you don't want to short there, right? Ian, on a 5 minute chart, 1 minute chart, it's literally on every time frame, from the 1 minute chart to a monthly chart. So you can use those concepts even if you're swing trading. I think that's the beauty of VPA, any kind of time frame. So here, you don't want to go short. If you want to go short in a situation where the candlestick are going up like that, say we have the same thing here, you want to see a volume decreasing. So we see clearly the divergence here with the candlestick and the volume. So if you see something like that, what it's telling me is that buyers are getting exhausted there. So there's a bearish reversal in play. You see the exhaustion while going up. Usually when the price go up, the volume should keep increasing. That's the definition of strength. So if you play reversal and you see that kind of price with volume action, there I will be really, really interested. For sure, after that, we'll see my criteria for the reversal. I will usually wait for another sign after that to really enter short in that case. But that's the kind of price action you want to see while the price going to the level where you're interested. Sam, can you speak to the time frame 5 minutes? Well, we're gonna see the time frames a little bit later. The way I play my reversals, I play it on the 1 minute chart, but you could play it on the 5 minute chart as well. All of those concepts I shared today, they can apply to any kind of time frames. So exact same thing if you play it long. So while the trend is going down, if you see the price action going down like that, the volume is increasing. Let's say that's a level you're interested. You don't want to go long here, because all the information you have here is that the price action is weak. Volume is still increasing. So for example, NVDA today, I know a lot of people try to play the reversals on NVDA, but NVDA never really gave a sign today that the price was ready to reverse. Every time it was making a leg down, the volume was increasing. So really hard to play a reversal on a stock that is not giving you any signs. Samir, yeah, we're gonna see it. I'm gonna go through some basic concept of VPA, and after that, we're gonna go to all my criteria for the reversals. So it's coming. So, so if you want to play the same thing here long, what you want to see is a divergence again. So while the price is going down to your level, you want to see a decrease in volume. So if you see a decrease in volume, it's telling you that the sellers are getting exhausted this time. So there's a bullish reversal in play. That's the kind of VPA you want to see. Lack of momentum from the sellers here until the buyers are ready to step in and change the direction. Because basically reversals, it's catching the inflection point. That's what you want to do. You want to catch the top or catch the bottom. So to catch top or bottom, you need really strong VPA sign. Because I know a lot of people try to play reversals with the cams, like the way Tor show it, but people lack of knowledge or practice in terms of understanding VPA. And I think if you're trying to play reversal without waiting for a strong VPA, first you're going to take way too much trades, and it's going to affect your win rate definitely. So I think VPA is such a good filter. It's going to help you filter a lot of trades that you shouldn't be taking, and it's going to left you only with really quality setup. Honestly, I think I probably have 1 to 2 max really powerful reversal setup per day maximum, and that's with a watch list of 5 to 6 stocks. So there's not a lot of trades, but when they come, they're really quality setup because they show clear VPA sign. Danny, for me, that's both of them are exhaustion. Could be an exhaustion on the way down or exhaustion on the way up. So it's either exhaustion from the buyers or exhaustion from the sellers. So let's see a couple of candlestick that I like to see at those specific levels where I'm interested in going short or going long. So the first one, shooting star, well, I guess you can call it a reverse hammer as well. I know there's a lot of names for candlesticks, but let's keep it to shooting star for now. So if you see that kind of candle happening, let's say at let's say you have R4 right here, and you see that kind of candlestick, the first one here, would you be interested in taking it short here? What do you guys think? No, no, no. And for what reason? Exactly. Exactly. Not enough volume. So that's a tricky thing, because when I started trading, I was really confused with those, because usually when you see this kind of candlestick, you're tempted to think the price is weak, right? The candlestick, the story it's telling you is that the price push up, sellers step in and bring it all the way down. So yeah, technically, just by looking the candle, it looks weak. But if you look at the volume and you remember the two concepts we saw in the beginning, which was confirmation or divergence, you'll see that this first example here, it's a confirmation. Is you have small price movement, always just look at the body, and you have lower than average volume. So it's a tricky candle seeing that, because it's trapping a lot of people to think that the price will reverse because the candlestick looks weak. But if you mix the volume with that candlestick, it's actually not looking weak. It's normal. It's a small price movement with a lower than average volume. Where it gets interesting is on that second example here. So if you see this exact same candlestick, small price movement, but this time you have above average volume. So here you have divergence. you have an anomaly. That's what we call anomaly here. So above average volume, small price movement, right at the level you're interested in going short. Let's say this time was R4. So that's what you want to see. So really, really important to mix the volume with those candles. And will be the exact same thing if you have a hammer candle, but on the opposite side of the trend. So if you want to go long, really important that you see above average volume. The volume is telling you all the information you need there. Because just by having a candlestick, it's really hard to predict what's going to happen. And same thing with a doji here. If you see this kind of doji, let's say in the lower part of a trend, let's say this is S3. So the trend was going down, going down, going down. Touch S3 and you have this candlestick happening. That's telling you that the sellers were winning the trend until a big fight is happening. There's your big fight in that 1 minute candle, 5 minute candle, daily candle, monthly candle, whatever kind of time frame. But you know that here there's a big fight going on. And after that, you just need another confirmation of going long, and we're going to see it later. Well, I like to wait for a 1 minute high, but we're going to see it more in detail. If you see a 1 minute high after that, it's like sellers are winning. Then you have an equal fight, and then buyers are showing you first sign of winning the fight after that. So you want to play that inflection point. That's basically it. So I'm also noticing that even such. Yes, Sam, it's important to see also the way the volume is happening while the price is going to your level. Because if you have, let's draw another example here. Let's say you have S3 here and the candlestick going down to your level. Let's say so you have first candlestick looking something like this, and then you have another candlestick, like massive candlestick looking like this. With, let's say this is the average volume and you have like a massive volume. Usually when I see something like that, I try to stay away from those. If the price goes down to my level way too fast, it's usually not a really good sign that the price will reverse. Even if the candle after that, you see high volume. Well, most of the time when the candle going down to your level like that, and then let's say you have a doji happening, most of the time the volume of that doji is not going to be higher than this candle here. So it's a tricky situation, and usually when I see that, I stay away from those. I like to see the price slowly going down to my level and then showing me those VPA. Good question. The trader, I'm not sure if this session is recorded. I know with BBT all the sessions are recorded and posted on the platform, but with Trading Terminal, I'm not sure. I'm not sure if it's recorded. I will check after that, but I don't think so. Anyway, this is a presentation that I think I will probably in the future redo with BBT, so that way will be recorded for sure. Sam is recorded. Great, excellent. Thank you, Sam. Appreciate that. Amazing. So another really powerful three candlestick pattern that I like is either the evening star or the morning star. Those kind of patterns, you will see them really often. Every week I will see those patterns happening on the 1 minute chart. And even on the 5 minute chart, they happen really often. And I love those setups, especially when the candle in the middle is with above average volume. So let's try to see the story like this pattern is telling us. So the price is going up. The volume is normal here, a little bit above average volume. You have good price movement. So no red flag there if you want to go short. Then you have a candle here in the middle with really small price movement and above average volume. So there you see, after being in a bullish trend, you have a big fight going on. And then the candle after that form a 1 minute low and close lower with, again, a little bit above average volume. So this is reversal kind of pattern that can happen either on the uptrend or on a lower trend. So if you're on the uptrend, you want to see evening star. If you're in a downtrend, you want to see a morning star. So I know this is a kind of pattern. If some people in the room read about Anna Cooling book, she how she called those again? I forgot. Pivot something. I forgot how she called it, but she have it isolated pivot. Thank you, IG. Exactly, isolated pivot. But you can call isolated pivot, evening star, morning star. But all that to say that those setups are really powerful, and it's important to recognize them. Could be really useful too if you're, let's say you're open range breakout trader. You already in the trade since, let's say 9:35. You play a 5-minute RMB, and then you see that pattern happening and you're already in the profit. Well, you should consider taking a partial there. So that's why VPA, it's useful not only for reversals trader, but for all kind of traders that can really help you to time your partials better and decide, should I get out of a position seeing that kind of price to volume action happening? It's a great insight. So I have an example here that will be interesting to read it together. So let's try to, for a moment, let's forget about the volume we're seeing here. So just by looking at the candlestick here, is it looking strong or it's looking weak? If we forget about the volume, what do you guys think? Mike, Ankita, Sam, Harvey, strong. Yeah, Ian, strong. I agree. So just by looking the candlestick, I 100% agree. This looks like a really bullish trend that I don't want to short or anything there. It looks strong. Now where it gets interesting, let's read it together with the volume. Let's start from the beginning. So price here push up, 3 candle going up, then we have 3 volume bar here also going up. So is this divergence or a confirmation? Mike, confirmation. Yeah, exactly everyone. This is confirmation. You have price going up, volume going up. Great. So if you're a reversal trader, you don't want to go short there. Then candle after that, we have a red candle going down. We have low volume here. So let's say this is a trend that's been going up for a while and it's right at your level here. You're interested in going short and you have this VPA here. Price starting to go down here, but low volume. You don't want to go short there. If anything, a lot of traders will go long here. I know a trader like Lenny, for example. I'm sure most of you guys know Lenny from BBT. If we will have, like, let's say the 9 EMA here, and Lenny see that kind of price action happening, he will probably buy right here. Actually, right here, when that candle start breaking up here. So if you see this, there's a lot of continuation traders that will keep going long and start pushing the stock higher. And as we can see, that's what happened. Then we have another leg up here with 3 candlestick. But there it started getting interesting. And we see this here. Well, Samir, I always go bar to bar, but always have an idea of what happened in the past 10 minutes, let's say. If I pass the time on the 1 minute chart, for example, if after 10 candlestick mixed with the volume bar, that's what's important for me. What happened before that, not too much. But usually to read what's going on, I go from candlestick to candlestick. Good question. So let's go back here to that example. So we have another push up, 3 candlestick going up. those three volume bar going down. So what do we have here? We can see the difference between those three candlestick going up and those three, right? This one was confirmation. Now this one is divergence. So, okay, if I have my level, let's say R3 here, and while the price is going up to R3, I see a volume decreasing, first red flag. Then the candle after that, we have this candle that we just saw the previous slide, which is the reverse hammer with really, really high volume, above average. Second anomaly there. So we have anomaly number one, anomaly number two, right at the level we're interested. And after that, we have a 1 minute low. So what I do here? Here I go short. Every time, if that's happening at R3, red flag number one, red flag number two, 1 minute low, I'm going short. And that's why I really like this example. Because in that case, okay, stop loss would have been probably here. I would have get stopped out. That trade would have been a loss, but the setup would have been perfect. And that's why I like this example, because it's realistic. It's showing you that even if everything is there, it's never 100% that's going to work. But that's the kind of thing you want to see. So what's going to happen? What's happening after that? Price push up again, and volume is still decreasing. So we have anomaly number one, number two, and we have number three here. So if I see another 1 minute low happening here, I'm going to go short again. I'm going to try it again. Where I wouldn't have taken another trade after losing one there is if that second leg up here would have been with increase in volume. So if I would have seen the price push up, volume increasing, okay, I'm staying away from this. This looks too strong. I shouldn't chase it. But if I see another VPA sign here with volume decreasing, I will take it short again. So I have a rule. Every time I lose a trade, I'm allowed to take another one on the same ticker. But if I lose two trades in a row on the same ticker, I'm done with that specific ticker. So this is a personal rule I have. Doesn't mean that's what you guys should do. It's just the way I do it. Because I realize that if I'm trading more than twice the same ticker after losing twice in a row, I get too emotional and I'm not trading the ticker anymore. I'm trading against it. And that's usually bringing me a lot of over trading. So just a little personal rule I have. So interesting example here. It's really interesting to see the difference between reading with VPA and just reading with the candlestick. Candlestick show you that it's strong, but actually if you look at the volume, it actually looks weak. So that's why I think it's really interesting, because it's giving you some insights before the reverse happen. It's really, really powerful. All right. Yeah, Boxy discipline, it's an ongoing process. It's something that it's the most difficult thing with day trading, and something you always need to improve. And I think the best way to improve your discipline is through consciousness. If you can trade through consciousness, like almost like you're trading and you have like an eye over your head looking at yourself. So remember that concept. Always try to be conscious of what you're doing and why you're doing it. Yes, Ankita, my execution, it's always on the 1 minute chart. We're gonna see my criteria in a bit of the way my criteria for the reversal strategy, but yeah, always on the 1 minute chart. Rana. Well, Rana, if you wait for a really powerful VPA, you will be able to catch those reversals, and they happen up pretty much, I will say almost every day. You have those quality setups. And when I say quality setup, it doesn't mean that it will necessarily work. It just means that it gives you an opportunity where all the criteria are respected. But if you play reversal without reading the VPA, yeah, for sure it will be tough. Yeah, Samir, like my execution is always on the 1 minute chart, but I still look a lot of different time frames. I like to, and again, depend the hour of the day. Because if you play reversal a little bit later in the morning or later in the afternoon, I think the 1 minute chart is not relevant. I think you should switch to a bigger time frame, like the 2 minute chart or the 5 minute chart. I will say even more 5 minute chart. But if you play reversals, let's say from 10 to let's say 11:30 a.m. Eastern time, I think you can read only on the 1 minute chart, definitely. But the more time frame you're able to read, the better it is. But if you're starting trading and trying to read too much time frames, it's going to be too much information for you. So I think sticking to 2 time frames, it's usually my recommendation. So for me, I will always have the 1 minute chart and the 5 minute chart open. But again, I like to keep an eye on the daily as well, to have a bias, and it's something that comes with experience, and you need to recognize like what is too much information for you, and if you're able to have more charts in front of you. Dwayne, no. Like I know Tor use a lot the 2 day relationship to decide if it's a higher range or a lower range. But for me, I don't look at the previous day. Well, I look at it in one way, and we're gonna see it together. But it's not exactly like the way Tor system works, where he plays either R3 or S4 on a specific day, or R4 or S3 on another specific day. We're gonna see it more in details. I'm getting there. So let's jump into the reversal more in detail here. So the way I play my reversal. So the time frame that works the best for me, it's in between the open and 11:30 a.m. And for the same reason that we just talked about, like if I want to play reversals in the afternoon, I need to read different time frame. Like the 1 minute chart will be too small of a time frame, let's say at 2:30 in the afternoon. And now for me, it's really more in the morning. That's where bigger movement happen quicker. I feel like afternoon, it's slower, doesn't fit too much my style of trading, but doesn't mean it's a bad thing to trade in the afternoon. I know a lot of traders have a lot of success in the afternoon. Again, it's something really personal for me. The time frame where I will play my execution will always be the 1 minute chart, but again, I like to keep an eye on different time frames as well. And here are my criteria. So I always try to go in the same direction as the daily bias. So this criteria here doesn't necessarily need to be respected 100%. But if this criteria is not respected and I end up taking the trade anyway, it's because the VPA sign it's a really obvious one. That's a tricky thing with VPA. You can have some VPA signs that are really obvious, and other ones that are still signs, but they're not as strong as others. So that's why it's tricky to read VPA. But if I take a VPA in the opposite side of as my daily bias, it really needs to be perfect setup. And how I determine my daily bias, we're gonna see it in I think in a slide or two together. Another criteria, the price needs to form a new low or high of the day. So again, when I play reversal, I'm trying to play the inflection point. So I'm trying to either short the high of the day or long the low of the day. So really important that it's at low or high of the day. Then that new high or low needs to be at one of those camera pivot points levels. So either R3, R4 or S3, S4. We're gonna jump into the cams in a bit, where I'm gonna explain a little bit the way I read those. Um, Anna, is it recorded? Yeah, I think. Yeah, I think. Was it Mike or Sam that is recording the presentation? But yeah, it's recorded. Alex, I'm getting there for the bias. And by the way, for the bias, I'm not looking at the SPY or the Q. I'm looking at that specific ticker. So if I'm trading a reversal on NVDA, well, I'm looking at the daily chart of NVDA. So after knowing where I want to take my trade, which is at one of those cams level, the second thing, the other criteria that needs to be respected, it's having clear signal with the VPA like we just saw together. So we need to see one of those anomaly happening at one of those cams level. And lastly, the order book needs to be bullish if I'm going long and needs to be bearish if I want to go short. So for the order book, I'm using Bookmap. I don't know if most of you guys in the chat are using Bookmap or mostly regular level 2 from your platform. Anybody in the room using Bookmap? Okay, so I see a mix of both. Well, both are displaying pretty much the same infos. The only thing that I really like about Bookmap is visually you can see clearer what's going on. You can see more depth. So I wouldn't say that Bookmap is a necessary tool that you need Bookmap to play the reversals, but it's just easier to see. Makes the information quicker to read as well. So I'm not gonna go in detail of the way I read Bookmap, the way I use Bookmap, maybe for another webinar, but I think most of you guys here are from BBT and there's a lot of resources there, courses to learn about Bookmap. I think even in Trading Terminal, some people have courses going to Bookmap more in detail. I also have my course in Trading Terminal where I talk a little bit about Bookmap. So I'm not going to go in this presentation here too much in detail about the order book. So how I use the Camula pivot points. So Camula pivot points, for those who don't know about this indicator, it's type of technical analysis tool used by traders to determine a potential support and resistance levels in the financials market. So trader will usually look for a breakout over R4 or a breakdown under S4. And then anything in between S4 and R4, it's considered a value area. So really important to understand the concept of value. So if you have a price that is inside the range, fluctuating like that, the price is just ranging in between values. So if you're a reversal trader, that's what you want to see. And you're a reversal trader, you want to play both opposite sides of that value area. So from here to here. So you want to go long here, you want to go short here. So anything in between R3 and R4, you want to go short. It's a selling range. So here it's a spot where you want to sell, you want to short. And here's a buying range. If you have a price outside of the CAM's range, let's say opening here, and then the price go down, R4, then you want to play continuation up. So you want to play the breakout. So anything outside of the range here, I don't want to short those things. I'm trying to stay away from those stock if I'm looking for a reversal. If I play O and B, that's something I want to see. If I play, let's say, a 5-minute RNB, the first 5-minute candle will close like that, I'm looking for the breakout. But for a reversal, I want to see a wide range and play both opposite sides. So I want to short here and I want to buy here. Everything in the middle here, it's in the middle of the value, so I'm not trying to play a reversal. Derek asking me, do you wait for the candle to break the cam level and retest for entry, or you anticipate and enter early? Like the way I play reversals with the cams, I don't necessarily wait for the price to exactly touch that level. The only information I'm trying to get from the cams is where are we right now? Are we in a selling range or a buying range? That's what's important. I can take the trade here right at the R3 level short. I can take it here. I can take it here, here, here. Everything in between there, if I have strong VP, I will take it because all I know here is that it's a selling range. Where I wouldn't like to take it is anything in between here or anything over here. That's the sweet spot here if I want to go short. And same thing if I want to go long in between S4 and S3. Samir, I usually, well, I use the cam with pre-market data. That's the way I configure the cams with pre-market data. So previously I was talking about the daily bias. The way I look and decide my daily bias is again using the cams in the exact same way. If I see that the daily chart, the price action is here in between R3 and R4, I'm short bias. If I see that the price on the daily chart is here, I'm neutral bias, so I can play both sides. If the price is here, I'm long bias. So even if I'm long bias, I can still take shorts, like I was saying, but the setup needs to be perfect. But if I want to respect really all my criteria and really stick to the system, that's how I determine my bias. And if the price, let's say it's over R4 here, I'm long bias. And if it's under S4, I'm short bias. So that's the way I set my daily bias. So let's see the difference here between an inside day or outside day with the cams. I know in this example here we see like R2, R1, S1, S2. Let's imagine that is R4, R3, S3, and S4. The important thing to understand here is that if I play reversals, I want to see a wide range. So what I mean by wide is that the relationship with the previous day of the range of the cams here is wider. The wider the range, the better it is for me. Because like I said, I'm trying to play both opposite side of the range. So I'm trying to play the fluctuation here, going long here and going short here. So the more wide the range is, the bigger the price movement I can catch from R4 to S4. Compared to if we have an outside day like here, if I see that the range is super wide, that means that there's big probability that the price won't respect the range and will start trading outside of it. So if you're a breakout trader, this is something you want to look at. But if you're a reversal trader, it's this one here. Anna, do you trade options? No, I don't trade options. Like I don't day trade options. I have options for my long-term portfolio more to as an edge for positions. But in terms of day trading, I never experiment with the options. Maybe something for the future. Yes, IG, exactly. I'm using the daily chart with monthly cams. So the way I have my cams set up in DAS, they're automatic. So the moment I switch to a daily chart is using a full month of data. Yes, Dwayne, let me remove the drawing I have here and I'll go back. I have more drawing here. There you go. All right. Yes. Suck, Rob. I'm going to the example soon. We're getting there. I know it's yeah. We're time is flying here. It's missing 10 minutes. So I think in this is the last slide, and then we're jumping into a bunch of example and read the VPA. That will be an interesting part. So the way I execute my trade, I need to wait for a 1 minute high, a 1 minute low. So if I have, let's say R3 here, price is going up. Let's say I have my VPA right here. I'm waiting for a 1 minute low. And then here I'm going short. So the 1 minute low, 1 minute high is the last criteria I want to see. My stop loss will always be the low or the high of the day, or under or over the CAM level. So if I draw it back here, price did this, we had candlestick with VPA here. My stop loss will be probably right here, just a little bit over the CAM level, just a little bit over the high of the day. The good thing with reversal is you can allow yourself to give it more room. The thing is you're catching the inflection point. So you're trying to aim a big price movement. You're going to catch a big move with reversals. So you can allow yourself to have your stop a little bit wider because you can easily catch a big move inside the value area all the way to, let's say, a selling range to a buying range. Then the way I manage my targets, I always wait for 4R. 4R is my first partial. Usually I go with 50%. So when you reach 4R, I take 50%, so I secure 2R, and then I keep scaling out on the way down or on the way up, depending if I'm long or short. After first partial, always move my stop to break even. This is an important rule I have to help me manage my emotions better. And I like to use trailing stop, a trailing stop with the 9 and the 50 EMA. So let's say I'm short on a trend down, and then we have the 9 EMA doing something like this, then the price starting to go up again, and then it's meeting the 50 moving average. Let's say that's more lagging like this. When both of them cross, I like to trail my stop and get 100% out. Not all the time, because sometimes the 50 moving average is really far away, but this is something I like to do, trail my stop, and it's a good way to secure profit as well. One thing I can recommend you guys to determine the way you want to scale out of a position after a first partial, let's say, I think it's something that no traders have like the best recipe for. It's something you really need to try and document. Like, try, let's say every trade you take, document like if I would have partial that way versus that way versus that way. Give yourself like 3-4 scenarios and document for 6 months and try to see which one will have give you the better result and try to stick to it. Because I think it's a tricky thing to know, like, is there really a best way to scale out of a position? Like Thor, I know he go out 100% at 4R. Me, I like to take 50% at 4R. Other traders like Andrew, they take 10% starting at 1R. So it really depends your style, and I think it's something you need to document to really know what is the most effective way to partial within your style of trading. Yeah, I can share my cam setup on DAS. Let me go through the example because we're running late a little bit, and at the end I'll share a screenshot. If I forget, remind it to me, Milad, for sure. Okay, so let's jump into some examples of actual trades that I took, and let's try to read the VPA that happened at CAM's level. So on this first example here on NVDA, it's at R3. So what we see here, price going up to R3, volume is increasing, no red flag. Then we have a first rejection here. So just by looking at the candlestick here, the pattern we're seeing is an engulfing pattern. But the VPA here, that volume there is not necessarily above average. So still not enough for me to jump short. Where it gets interesting is after that, when price start to push up again to retest that level where we rejected previously at R3. And look at this volume here. Really, really low volume. So that's telling me, and decreasing volume, that's telling me that buyers are getting exhausted here, forming a double top. So after seeing that right at R3, I go short 1 minute low and catch the move all the way down. By looking at this trade again here, I see one thing I did bad. The way I scale out of the trade, that's way too much partials. Probably I was too emotional there, and I got too excited, started taking profits too quick, and I left a lot on the table. But the important thing to recognize here is the signs we see right there at R3. Here is another one on AMD, and this one is a really, really powerful VPA sign there. Look at this candle here, and look at the volume here. So this price movement of this candle right there versus this one, we agree is pretty much the same price movement. But this volume bar is what, like 3 times bigger than this one? So that's weird, right? That's telling you that there's something weird going on. This candle should have had the same or similar volume as this one, but instead it was way higher. So it's pushing up with way too much volume, going up to R3. You see, in that case, it's not exactly R3, but that's close enough for me, especially if the VPA is strong like that. And then the candle after this one, we see a rejection candle that, just by looking at the volume, doesn't look that big if you compare to this volume bar, but it's still above average volume. And it's the biggest rejection red volume bar we have here since what, like the previous 15 minutes. So when I see that engulfing the previous one, I went short here. And that one took a lot of time to work out, but eventually broke the VWAP and went all the way down to S6, where I cut all my position here. Rana, yeah, my first target is always 4R. So my first partial will always be 4R, 50%. That's the way I partial with reversals. With different strategy, I play differently. I can go with more like 25% instead of 50. But reversals, when I reach 4R, I like to secure 2R in profit. So in that case, my stop was probably right over R3. And I don't remember exactly, but maybe it was even over that resistance line I have here, which I don't remember what it was. Maybe it was pre-market high or something like that. So see, I give a lot of room as a stop here, but my goal is to catch a big move. So that's why I like reversals. You're catching tops and catching bottoms. Here's another trade example on Amazon. How I create my watches in pre-market. Well, first thing I like to see wide range with the cams. So first, if I see a cam range compared to the previous day, which is really tight, gives me more probability that the price will play outside of it. So for reversal, I tend to stay away from those. I like to see wide range. And after that, I like to see for sure big volume. And most of the time, I stick to stocks like Tesla, AMD, NVDA, Apple. So for those of you in BBT that look at the mentors watches every day, you'll see that my watches is pretty similar every day. So let's see this example here on Amazon. So Amazon is going up to R3 here. On those 3 candles bar, volume is increasing. All right, no red flag. After that, we have first rejection there, above average volume. Okay, I see that, I'm getting interested, but not enough VPA sign to push me to go short. So then I wait to see more. Next candle after that, white candle here, or green candle, pushing up. And while this candle is pushing up, there's the VPA. Pushing up with really low volume. lower than average volume. So I see that the buyers there are starting to lack momentum. So it's kind of a double top happening here. Then I wait for 1 minute low, and that's where I went short. So I went short here. My stop was probably here, and my first partial was around here. So that's the 4R, more or less. So important to have patience again, because look at this trade. It went down right away when I entered, and then start chopping for about 15 minutes. But the good thing about the way I play those reversals is that, again, you're catching the top if you go short. So all that time, you're still comfortable. You're comfortable that if you were right, you catch probably one of the best possible price you could have expect there. And then eventually plus the VWAP and start breaking down. KO, I don't have the daily chart with those examples, so I will be tricky to go check back the daily chart in those specific dates, unfortunately. Let's see another example there on Google. So let's see the VPA that Google is telling us here. So first, price is going up towards R3. Then we have our first rejection here. Then we have a second leg up. And that's where it's interesting on that second leg up. So that first leg up, volume was here. Second leg up, volume was a lot lower. So that means that the second time the buyers try to push the price up, they're starting to lack of momentum towards R3. So there I get interested. And then we have that isolated pivot or evening star pattern happening right here. And volume is increasing on the way down. Took it on the 1 minute low. And again, it's another example of a trade that took a while to work out. Like I entered here at what, like 10:50? First partial was at 12 something. So for more than an hour, just holding the trade, letting it chop until it reached my target. And you'll see sometimes will happen that the price action will spend the whole day just chopping around, and maybe you won't even never touch your target, and at 4 you close the position. That happens. But you need to be comfortable just letting the trade decide what's going to happen, because you cannot control what's going to happen. So it's all about being comfortable, letting the trade unfold. Samir, give me a second to read it. Yes, in the case of Amazon, I will take it anyway. As long as the second time that the price is going up, trying to retest that level, it's low volume. If that, let me go back to Amazon so I can show better. So as long as this candle here have low volume, that I have my sign of lack of momentum, yeah, I will take it short on a 1 minute low after that. But if that volume bar would have been more something like this, or even something like this, I wouldn't have taken it. Rob, I only have example where I actually took the trade. So yeah, no, I don't have example where I haven't took the trade, but I have some example where it didn't work. I believe a little bit later, we'll see. Have a couple more. Yeah, that's one where interesting example here. Let's see it together on TQQQ. The trader, when you take the RMB, when I take the RMB, I'm looking at VPA as well. but it's the 3 candle bar VPA like we saw a little bit earlier. So if I play 5-minute RNB and say the price is going down like this, and I have VWAP like this, I want to see the candlestick going up to the VWAP with decrease in volume. So it's VPA as well, but playing in a different style of trading, more as a continuation style. So on QQQ here, this is such a beautiful VPA there. Look at this candle here. The price weak going down to S3. And look at that, this candle with massive volume and small price movement here. That's a price movement. So super tight price movement, really high volume. So a big fight going on. Here, I'm really interested in taking it long. All I need to see is a 1-minute high. And the 1-minute high happened 3 minutes later, right here. So right here, I took it long. We can see exactly where my stop loss was, right? Right here, like literally, I don't know if you can call that manipulation or whatever, but I got stopped out like to the penny at low of the day here. And eventually I went long again right here because all the signs were still there, still valid. And I was still confident that the price wanted to reverse at S3. If I would have lost that second trade here, like I said, like one of my rules is that I'm not even going to look at TQQQ anymore. I block myself from trading it twice. But in that case, the second time worked and stop loss was probably a little bit under low of the day. And I catch a move here from S3 to R3. But the most important thing to see in that chart here is the VPA sign we got there. So see how interesting it is that this VPA is telling you a sign that the price want to reverse, what, like 5-6 minutes before it actually reverse. So that's why I think this VPA is so powerful, because it's telling you inside before it happens. It helps you to predict the future, basically. Dwayne, yeah, always use fixed risk. So always had a hard stop, always risk the same amount. That's the way I like to trade. And that's the way I recommend most traders to manage the risk. I think it's really hard to trade with a mental stop emotionally. Really hard. It's a big challenge, and I don't know. I don't know. I personally couldn't do it with mental stops. Here's another example on QQQ. This one is interesting because this one I did something wrong on that trade, and I will be curious to ask you guys what I did wrong on that first attempt here. What do you guys think? Maybe I can zoom to help you guys see better here. Oh. I'm not sure I can zoom. Sorry about that. Okay, so let's go back. What do you guys think I did wrong on that first entry there? So draw too far away from R3, IG new low, no new low on entry. GB no new low on entry. That's it. No new low. So I like, in terms of being far away from R3, that could be a valid argument, but in that case, I would have taken it anyway, even if it's that far away from R3, for the reason that the cam range is wide in that case. So that first entry, my stop loss was here. So my 4-hour target, I'm still inside the range. I can reach my 4-hour still being within the range. If S3 would have been here, yeah, in that case, I'm too far away from R3, I agree. So the mistake I did on that first attempt here, no new 1-minute low. So I got excited there. I saw some VPA. I was confident that the trade was ready to reverse, but I didn't wait my last criteria of waiting for a 1-minute low, and that cost me an R. But the VPA, as you can see, price moving up, volumes decreasing. Then we have second VPA there with a small price movement on that candle here with above average volume. So after that, 1 minute low, I would have been perfect trade, but in that case, no 1 minute low, price went up. Then I'm still interested in the trade because of that first VPA here. Well, first anomaly here, second anomaly here, and then we have isolated pivot or evening star pattern happening there. So I enter short again here and see better entry price. Stop loss was probably a little bit over high of the day. And in that case, I got lucky because the price started moving down, up again, but never really touched my stop loss and then double top. And then I catch my target there. Another valid entry could have been somewhere here when it made a double top and then another 1 minute low. So that was another trade on the Qs. Let's see this one on INTC. So let's read the VPA again on INTC here. So this one is interesting as well. We see the price moving up. And guys, look at that, the volume here decreasing. Right at R4. So we're entering an oversold territory. We have strong VPA. Then we have doji here. So I enter 1 minute low, not the best fill here. I didn't get filled right here, just a little bit lower, but still. This trade took a while, chop here, and eventually lost the VWAP and reached my target. But the important thing to recognize here is the decrease in volume. The buyer's getting exhausted. That's the sign. Is that the last one? No, I have another one here. So this one on the Qs again, interesting trade because this one I played it both ways, and we have VPAs on both ways as well. So the first VPA is a double bottom at S3, and you can see that first leg down, high volume, second leg down, lower volume. Sellers getting exhausted, so I entered 1 minute high, nice bounce on S3, got my stop probably here, first target at 4R, which was R3, and then I cut the rest of my position at R4, which was my next target. And actually the exact candle where I got out here was a VPA. So this candle mixed with this volume, strong VPA with really above average volume, and a spot price movement, then went down, tried to push up again with low volume. So I enter on that double top 1 minute low and catch the move short after that. So really, really nice to play a strategy both ways, and they work as good long or short. In that case, I got lucky, I gotta say, because probably it wasn't news here. Usually you don't see the Qs reacting fast like that. You don't know the way up or down with high volume. So I think I got some news helping me there. But the important thing is the things you see before your entry. The VPA is happening before your entry. And was that that was my last example. So basically, just if I do a little recap quickly, it's important to recognize that you want to short in a selling range in between R3 and R4. You want to buy in a buying range in between S3 and S4. You want the CAM range to be wide, and you want to read a clear VPA happening at those specific levels. If you see all of that, then you play on a 1 minute high long or 1 minute low short, and you let it go. And I think the most important thing is to be patient. Like, let the trade go. It's like if you have a fixed risk, let's say you're risking $100 per trade, see it that way. See, like, I'm willing to pay $100 to see if I will be right or wrong. So the moment you enter, even before you enter, the moment you take the decision to take the trade, be comfortable that whatever happened, you already accepted the loss. So at that point, you just let it go and you're comfortable. So that's pretty much the way I play my reversal. I hope was useful information for you guys, and I made myself understand in a easy way. And I'm looking forward for the next webinar, either with Trading Terminal or with BBT. Thank you for the feedbacks, guys. Thank you. It's nice to see that that this information was valuable. Thanks, Ankita, Ian, Sam, Eric. I will see you guys in the chat room. Hopefully, we'll be able to catch many more quality setups. Oh yeah, Milad, I haven't forgot about you. Let me share with you right away my config. Let me open my DAS. Maybe you can take a screenshot then. So if I go to study config here, pivot points, that's the config I have. Sharon, Jerry, David, Jay, Dwayne, thanks for your feedbacks, guys. See you soon in the chat room. David, about the video of the presentation, I think Sam have it. Probably Sam will share it with me, and I can you can reach out to me, and I can then share it to you. Let me put my email here on the chat for you guys. If you have any question, feel free to contact me. And by the way, guys, I also have my courses on Trading Terminal, where I talk more in detail about the way I play my reversal. I talk more in detail about how I play my open range breakout strategy. I talk about technology, psychology, even some swing trading strategy I have. So a really complete course explained in an easy way. If you're either starting trading or you're a more advanced trader, I think there's a lot of valuable insight there. If you guys are interested, the course is still 50% off, if I believe so. So yeah, feel free to check it out. Dwayne, yeah, let's see the volume. Study config here. There it is. See period 9 actually. Yeah, Sam, no worries. You can email me, or also have the time slot with BBT in the chat room every Thursday at 1 p.m. Yeah, with Lenny. So if you guys are in BBT and have any question, I'm in the chat room every Thursday at 1 p.m. or my email as well. No worries. I usually try to answer all my emails. All right, guys. So I wish you all a good evening, and we'll see each other back in the chat room or in another webinar. Cheers, everyone.